I think I'll be putting my neck out on the line for this one, as I have done throughout this cycle, especially weeks ago when we were looking at the top coming in for the cycle. Now, of course, there is no bell that says this is the exact top. I've always maintained that tops are a process and bottoms are a process, but our job as traders, investors, are basically just to take a chunk of profits out of the middle of the market. The money in your bank account doesn't care where it came from. It doesn't care if you bought Bitcoin at 30 grand or 60 grand. It just wants to know that the money is going up. So with that in mind, and my neck firmly out there for this one, let's dive into today's video, because I think this exact same thing has happened in the prior cycles. So I'll give you those details in this video along with any signs of invalidation. There is always invalidation because the markets are unknown. We just have to put our money where we think the market is going. And if it's not going that way, well, you got to get out. I think it's going in a particular way. That's what I want to share with you in today's video. Hit the like button, subscribe to the channel. It's your home of macro cycle analysis. Heaps to get through. And a reminder, it's Black Friday week. There is a special, a lifetime discount on TIA Pro. Link to that in the top of the video description or right here on the homepage. So I'm going to start with the market and any signs of different narratives that are going on. We're going to get through traditional finance and then get into Bitcoin and crypto. So gold, silver have had a day up, S&P 500 also up, NASDAQ up. New narratives are building on those down days for the stock market, and they were again around the Japanese yen carry trade, essentially selling off yen to buy US to get the improved yield. But now the Bank of Japan is increasing their interest rates, therefore it's costing more money to sell the yen to then go and buy the USD. So they're going to have to sell the USD, sell the US stocks, dump the market, and go back and buy their Japanese yen so that they don't get caught out in this carry trade. If that sounds like a whole lot of jargon, don't worry. I don't think the media really knows what the hell is going on either. And I think this is all just another fearful tactic at, well, pretty much the top of the market here. Of course, yes, there can be corrections, but I don't think the cycle is over yet. We've maintained for years on the channel that we're running into this peak of the 18-year cycle, and then we'll get the correction on the other end. Where does Bitcoin fit into all of this? No one knows for sure, but what I'm playing at is that Bitcoin goes up with the 14-year cycle, and then it comes down with that roughly 4-5-ish years of a collapse. So I think we could be going into a multi-year bear market, but let's leave that aside for now because the shorter term isn't looking too bad for BTC. So with a new fearful narrative, it's no surprises that we're still seeing the sentiment for the stock market in fear, and in this case, extreme fear. This typically happens towards some low, local low, get the rally up, and that should also help Bitcoin in the short term, like we're seeing with the total crypto market cap as well. So that's going to include all your altcoins, shitcoins. In this case, I suspect it's going to include your altcoins because they have been going up for the last few days. And what we see next is typically a rally into the next resistance point. So how is this all going to continue playing out? Well, I think there's going to be some further rallies here for the stock market. So there's still going to be some good news coming through for the rest of the financial space. You can see we've had a couple of green days here. I'll just refer to them as green days. You guys know, if you are following, that is actually a down day, lower high, lower low, but we had one day up from the low, and the 5-year cycle looks like it's catching up again, basically on track. You can see this top at the moment, a little bit of a correction. We'll start the day soon in the next several hours for the US, and then there's this grind higher. So what we've seen over this period for the S&P 500 essentially is a grind sideways. Firstly, we had it up, then down, and now we could essentially say the whole thing is sideways from this point. And what we saw 5 years ago was down, then up, down and up. Well, the whole thing is sideways through that period as well. The next stage of the 5-year cycle is for the market to grind higher slowly. And that could last anywhere into January, just looking at this cycle before we see some significant corrections. And I think that starts to line up with some of the timing that I'll show you for Bitcoin and the total crypto market cap. Now, the interest rates have flipped yet again. 1 week ago, there was less chance of there being an interest rate cut in the next 16 days. And now, 1 week later, that has flipped all the way to 80% chance of a cut. So it's needless to say, the market really doesn't know what's going on at this point. The stock market is climbing higher, and the interest rate probability is that there is going to be a cut even with the stock market climbing higher, possibly off the back of some unemployment news or some of the AI stocks not doing as well. But nonetheless, we'll find out in the next 16 days. Now, for the crypto data, well, we've seen the fear and greed index climb slightly higher again today from 19 to 20, still in extreme fear. As I've talked about in the last week or so, when we see extreme fear at these lower levels for a considerable amount of time, I've gone through the data in detail in those videos, so I won't recap it all here. Generally, it suggests that there could be further to go, especially after running into extreme greed and then the sentiment beginning to die out slowly. So yes, we could spike here, but I think overall we could be running into this longer period of resetting for the sentiment, like a much longer period than what we had seen on the way up. There was really only short-term moves to the downside for the market sentiment. The liquidations been roughly okay here, 300 million for the day, 100 million in longs, 250 million in shorts, which potentially leads to more short squeezing. You can see here that the 24-hour long to short ratio is still favoring the shorts, and by a considerable margin. We're getting very close to that 4% again. So a lot of traders are still trying to short the market. Even if we're hearing on Twitter, X, that there's a bounce coming, like I'm talking about here, a relief rally, what the traders are actually doing, they're still favoring the short side here, nearly by a 4% differential. If you have 48 here and 52 here, that's 4% difference, which is quite significant for the leverage markets. Therefore, there is the chance that we continue to squeeze higher. Bitcoin continues to squeeze higher, which is part of what my narrative is, my base case for the next 1 to 2 months. Now, the exchange volume has continued to hold out here, so we still know that there are traders out there. We haven't broken down from the $46 billion lows that we saw through August and September. Therefore, well, we're still grinding sideways. There's still activity in the market. That's a good thing to see there for volatility and trading. Otherwise, we go into some depressed periods like we've seen in the past. These times, very quiet, all things considered, and that's essentially not where you want to see any of the market go, whether you're going up or down. If you're looking for that trading volume, you need to see this thing running higher. Otherwise, things get really, really tight ranges. Now, in terms of Bitcoin and its news, the thing that keeps coming to the headlines is, of course, strategy and how much Bitcoin they hold, being roughly 650,000 BTC, obviously in the billions of dollars. On a day, it fluctuates billions of dollars. How much are they losing or gaining in their paper profits? The thing I'm concerned with isn't about any sort of leverage, isn't about whether they have to get completely liquidated or anything like that. It's more of a slow, grinding bleed that would be absolutely catastrophic for Bitcoin. Now, I don't know, of course, if it's going to happen, but there are some signs that they have a lot, well, we know they have a lot of Bitcoin, and what Michael Saylor keeps pointing to is that they have a 71-year runway, according to management. So this comes from management, meaning that the amount of Bitcoin that they hold to be able to pay back investors their yield that they've been promised, and I guess they could cut the yield at any time as well, up to them. They could sell off stock, they could sell off whatever assets they have. They've got to come up with the yield somewhere, and that could mean selling off Bitcoin over this period of time. I am by no means suggesting it's going to be a 71-year bear market. I think that's, I've never seen that in history, unless the asset goes to zero and no one wants it anymore. But in this case, it said 71 years of dividend coverage, even if Bitcoin price remains flat. At the time, they're talking around 80 grand. If it falls to 50 grand, then of course there's less years there. But this could lead to that multi-year bear market that we're looking at after this top comes in. Now, Bitcoin could be at the top now, could be the 126 top, maybe, who knows, it runs higher to 130, 150. We don't know for sure. You know what my point of view is. I've obviously got to take a position, but I'm discussing both sides here for the benefit of you to make up your own mind. In regards to that 71 years and the 18-year cycle, that could be, or this could be one of the reasons that we see a multi-year bear market for BTC. Maybe we see a low in 2026 and we start to see the market rally out of this low. For example, it comes down and then starts to rally out of the low for 2027, 2028, like all previous cycles. They hit that low point, and then for the next couple of years leading into the halving, they start to rally. But what I mean by a multi-year bear market is that we don't see a new high. So it would start to run down into 2026, find a low, and then start to run out 2027, 2028, and wherever that next high comes in is most likely going to be underneath this high. Basically I'm going to leave it with underneath this high. Maybe it runs slightly higher, but really that would mean a multi-year bear market from that point. You'd see it just roll over again and start to phase out. So that's the long and the short of it for the long term there, going off on my side tangent. What have we seen with each of the cycles when we see the market low and then rally higher? So the total crypto market cap, I think, shows this the best. You can see the red line here is your 200-day moving average. Now the move into the all-time high, so you got a low and a high, a low and a high. We can see that it ran up into it, tested it, pushed higher, came back and tested it. The last cycle ran up, tested it, slightly underneath. This one here, again, slightly underneath. Ran up again, came back, 1, 2, 3, tested it, came back, 1, 2, 3, tested it, and then ran into that final top. And for all accounting measures, July was the extreme greed top. I think we got a day on extreme greed. So here it is, 79 reading. That was as Bitcoin ran up into July 10th and 11th. Then you've got the next top here. This was with all the rest of the altcoins because we're on the total crypto market cap. And then of course the August and October tops that led us to that final move. So for the extreme greed top, that came in around July. So the market ran up into this high back in 2021. It also did it here in 2025, gave us a few more little pumps. And then on the way down, this is uncanny how very similar it was. The move down, a little bit of a rally here, and then a quick dump in December to the 200-day moving average. This time, however, you had these little moves with this extra false move to the top, what Wyckoff analysts would call an up thrust after distribution. So this period here could look like distribution. This is the up thrust to test if there's any more buyers coming in. There wasn't. A lot of selling came in, and then we got the dump down. So on this day here, the 10th of the 10th of October, massive flash, $20 billion. Look what happened in 2021. Flash, big day down, huge move. Tested the 200-day and then held out for a little while. Put in a little bit of a double top here as well. Top, top, failure, crash. What we saw in October was the crash here. So that was the liquidation day. Top, top, hold out, crash. Yet again, double top just above the 200-day moving average, and then it came down and crashed below it. We got it there, crashed below it. We got a test. So after that crash, a test of the 200-day, and then a huge collapse after that point. 2021, we got a test of the 200-day, and then, relatively speaking, a huge collapse on the day there. That led to the local low, which then led to a roughly 2-month relief rally into that top. So it was about 2 months there because it ran into late March. There may have been a day or two there in April. Yep, right there. And then things started to roll over from that point. So if Bitcoin has found this local low, and as I said in the intro, putting my neck out on the line here because, I mean, who can tell the future? I don't think anyone can tell it. We just got to look at, well, I think we look at history. We study to see whether there are any patterns, any repeatable rules, repeatable signals, indicators that can give us a bit of a guidance to what happens next, a bit of a roadmap. Then I personally like to take those. Some people disagree with it altogether and they try to go with fundamentals. Let them do their own thing. If that's you, maybe you haven't found the right channel here. But nonetheless, so far, I think we have seen almost the exact same repeat, basically stemming from March to 2025. And it looks almost exactly the same as June 2021. Crash into that low, test of the 200-day, pull back into another low. In this case, in 2025, we had the test of the 200-day. The correction actually came into a lower low here, but you've still got the two lows forming. You've got the extreme fear forming at those lows, and then you've got the rally out of those lows, and we've already covered that entire pattern. So we find ourselves somewhere around here in January 2022. So if we take a fractal, grab that, we could be looking something like this. Putting that onto the chart there, we can make it a little larger to then reach the 200-day. And if we're looking at it something like that, of course, this 200-day is going to come over. So we could probably move this down a little bit. I think it could look something like that. We're getting a few tests higher. We have talked about some of the Bitcoin price targets on the way up. And should we see a resistance at those levels, then let's look towards some similarities to 4 years ago when we saw the correction and then the relief rally stemming from extreme fear. The pattern on the way down has almost been identical in terms of the flash crash from the top, the double top after the flash crash, which led to the weakness, the testing, even the short-term testing on the way down after the double top, the crash through the 200-day, then the retest of the 200-day, and then the crash after that point. Everything has been looking very, very similar, which is why I still look at the 5-year cycle. Things continue to look very similar to for the S&P, which was 5 years ago, and for Bitcoin now at this stage, looking very similar to roughly 4 years ago when we had that top there. So the price targets to the upside on some sort of a relief rally here. We've got this little congestion in the mid-90s. So if we can't get over this mid-90s section, then we've got to relook to history. That's going to be actually worse for the bull market and better for the bear market. The bear market's going to be going, well, the bear market wants to go down, right? And so if we got some major rejection in the mid-90s, which is around this area as well, and beneath all of these lows here, so 92, 93, 94, then that could lead to another test of the low, which really starts to put a lot of pressure on the bulls to get any sort of recovery from this point. Barring that and getting a move above the mid-90s, then we look towards the next resistance level. That's going to be around 98, 99, and of course the 100K being the psychological level. That was the prior bottoms before the market then tanked from those lows. So that was holding the market up. Now it's up to the bulls to prove that there's going to be some strength to get it back above those 99, 100K lows. And then if it can do that, there's a lot of work to do here for the bulls. We're looking towards 107, 108. So that was the level that we were watching for the breakdowns over the last couple of months. That we really needed to hold the market up. Tested it a few times here. You can see on the 10th, broke down, got above it, tested it again here and here, and then that was the serious breakdown. 3rd and 4th of November, the retest on the 11th, and then collapse from that. So that is going to be a pretty pivotal point for the bulls if they can get back above that level. That could get things looking sweet again. But until then, there is a lot of room to move in any sort of relief rally for Bitcoin. And in terms of the timing, there is still a lot of time. Well, I think 1 to 3 months is a fair amount of time here for the bulls to push it past 108. Otherwise, it is, I think, going to be failed attempts at getting back past that level of basically the invalidation of a relief rally and the confirmation of a successful bounce that could then test a new all-time high price. So heaps to do in this next few months. I think it's also going to go quiet as well. This period here wasn't so loud. A lot of the market had been, the sentiment and the excitement had gotten washed out. You can see the moves were quite small considering where it had come from. And yeah, there's going to be days that there's some excitement. You can see like days like this in February had big move high, 10%, and another 14%, and another 8%, and a 4%. But of course, it kept coming back to meet those areas. So there's still going to be significant days there, but it doesn't seem like, or I don't think it's going to be like what we've seen in the past with these huge moves into those tops. Now we're possibly looking at this. And as I said, putting my neck out here on the line, let's see how we go from this point. And another thing, because we never end, of course, that is looking very similar to last cycle. Something that happened exactly the same is the USDT dominance. The circle, that's 2021, 22, so we're leading to 22. We're looking at the minor bounce. The minor bounce could be very similar to 22. It could be this area or this area. I still need a little bit more time to see. Nonetheless, the price corrected. This is the dominance of stablecoins. So basically liquidity coming out of Bitcoin, coming out of altcoins and going into stablecoins. It came back to this price zone, which was roughly around the top of that first breakout move. So that breakout move there was around 3.8%. This cycle, it was around 5.2 to 5.4%. That's where I got this rectangle. So that puts the pieces to the puzzle firmly in place. Let's say loosely in place at the moment because it hasn't got there yet and no one can tell the future. But what I think is if we see the USDT dominance scale its drop here, come back towards 5.2, 5.6, because you got the 50% there at 5.35, so through the middle, and you see support come in for USDT dominance, that could be one of the first areas that Bitcoin and the total crypto market cap find as resistance to then move its way down and then possibly test again, which then repeats something similar to what happened in 2022. You can see that this has basically been playing out like almost exactly the same. We watched it from March, we watched it from the breakdowns in early 2024, and then the rallies, and then the higher lows it formed, and then this breakout to the upside. Higher lows it formed, breakout to the upside. So I need to see this structure change to move back towards being more bullish than bearish. Tops are processes, bottoms are also processes. I think we may have a little more time, especially when we look at things like XRP and Ethereum overlaid on our low forecast chart here. Of course, I like to use these things a little loosely here because there is a lot of time in between, but they're a roadmap to where things may be going. And the time target we're looking at is somewhere around mid next year, mid 2026. I know some dates are people looking at October, some people looking at May. We're looking around that mid 2026 because of the liquidity flushes here. Money coming into the space in your Ethereum, MicroStrategy, XRP, and then flushing back out. MicroStrategy is also having pretty tough time of late, but it also has that chance for that relief rally like we've looked at for Bitcoin. Now, does this all happen in time for or before the 18-year cycle peaks for the stock market and risk on assets? That's the big question here because we are getting very close after 14 years from the economic cycle low and roughly 16 years since the S&P 500 low, running up all the way from 2009. We have begun to see the everything bubble, or at least some of these assets, begin to roll over. The main one here is your home builders ETF, which is the main one overall that dictates the cycle. The yellow is, of course, gold, and I'll come back to that in future videos because I think we've talked about a lot of things in this video already, and the S&P 500 may still have a little more time to go here. So I think things are looking pretty similar. They're still looking pretty similar to 2022. That is my base case, and should things get invalidated, you know what I'm looking at should they get invalidated. But for now, I've got my sights firmly set in one way. Reminder, Black Friday sales are on this week. I'll be talking about how I navigate my portfolio through the peaks and the corrections in the market and what I'm doing with my capital through those periods where it's going. Like and subscribe. Black Friday link in the top of the video description, and I'll see you guys back here at the next video. Thanks again. Peace out.